let's take a quick look at what has happened this week with CPI as well as price action on the S&P 500. As you can see here, if you watched my previous video, I talked about this 389.63 level as being a key level that would decide either a bullish move to the upside or a rejection and push to the downside. We did break above that level, and then today we did have CPI come out. We had a push down to this 393 level, and we found support and pushed higher. Now, as you can see here, historically, price likes to move quickly around this level. It doesn't like to stay here. So you have price acting as support, pushing higher, pushing higher. You have price acting as resistance, pushing lower, pushing lower. And we've come down and retested this level multiple times. You can see it here back in July and the same thing in September. And then we had those pushes to the upside, push to the upside, push to the upside, push to the upside, rejection, and push down. Now, just using this logic, you can see here that 389.63 is a key level. 393 is also a key level. So in between these 389 to 393 is where bulls and bears are battling to either push things up or down. You could see that price likes to come up to this 407 level and often rejects there. So rejects here, rejects there. Tries to hold at 393, rejects here, breaks down here. So really what I'm looking for right now is there's two key levels. So we have a gap to the upside on the hourly chart to 400. So if price wants to push to 400, that's a pretty good short dated put contracts, SPY 0 dates to expiration. Or if we do break above this, I'm really targeting this 407 level. This little zone right here is likely to act as resistance. If that level doesn't hold, you could see here that there's a quick spike up to 415. So 415 might trade. 407 might trade. Or this level. I'm planning on scaling into puts at each one of these levels. And there's even an extended level at 430. Now, on the daily chart, if I remove all the drawings here, you can see that there's this upper trend limit, and now we are approaching that level once again. So we might break down, reject off of that level, and then same thing with the 200-day moving average. S&P 500 is right at that level as well. And you can see here we rejected it, rejected it, rejected it. So this is all confluence that it's a pretty good short entry opportunity. And then on the flip side, if you're looking at the VIX, you could see here that the VIX has come down to this level multiple times and always bounced. And if volatility goes higher, then the market goes lower. So that's it really for this week. Obviously, we have tax day coming up on the 15th. Monday is a holiday, so the market will be closed. We have OPEX, which is next Friday, and then we have tech earnings. So I think less and less people are more focused on the Fed, and now they're starting to switch to, well, what is the economy doing? The Fed plans on keeping rates at 5%, terminal right around that level through all of 2023. And so what's going to happen to the real economy, real earnings? Is unemployment going to go higher? Is the Fed going to continue to keep rates at this level? Are they going to pivot and start to lower rates, or are they going to stop quantitative tightening? That's probably something that most likely will happen later in the year. So right now I'm still bearish. The market is pushing higher. Like I said, look for these levels at 400, 407, and 415. And we'll see how things trade into earnings season, which is the end of January, early February. And then, of course, we have the FOMC meeting on February 1st. Stay safe. I'll see you in the next video. Peace.